What's the difference between GST, HST, and PST, and which apply to US businesses? For US companies expanding into Canada, understanding the difference between GST, HST, and PST is essential. These taxes affect pricing, registration requirements, invoicing, and compliance obligations. While the terms seem similar, each represents a different tax structure with separate rules, rates, and administrative bodies. Getting these distinctions wrong can lead to charging incorrect tax, filing in the wrong jurisdiction, or missing registration obligations altogether. GST, Canada's Federal Goods and Services Tax. GST is a federal tax applied to most goods and services in Canada. Administered by the Canada Revenue Agency, CRA, the GST rate is the same across the country, 5%. Any business that registers federally will collect GST automatically unless the province uses HST instead. GST applies to sales of goods, sales of services, digital products, SaaS and subscriptions, online memberships, most commercial activities. Because GST is federal, it provides consistency for businesses operating across multiple provinces. HST, harmonized sales tax in participating provinces. Some provinces combine their provincial sales tax with the federal GST to create HST. This simplifies tax collection because businesses charge a single rate rather than managing multiple taxes. The CRA administers HST on behalf of the participating provinces. HST is used in Ontario, Nova Scotia, New Brunswick, Prince Edward Island, Newfoundland, and Labrador. Rates vary by province, ranging from 13% to 15%. HST applies to the same types of supplies as GST. For non-resident businesses, HST generally simplifies compliance because a single account manages all federal and provincial obligations. PST, provincial sales tax in non-harmonized provinces. Several provinces do not participate in the HST system and instead maintain independent PST systems with separate registration rules, rates, and compliance requirements. PST applies differently than GST HST because it typically taxes only tangible goods or specific services. Non-harmonized provinces include British Columbia, PST 7%, Saskatchewan, PST 6%, Manitoba, RST 7%. Quebec, QST 9.975%, administered separately. Each province has distinct rules for when non-resident registration is required. Here are the main differences US businesses must understand. GST is federal and administered by the CRA nationwide. HST is a combined federal-provincial tax administered federally. PST, QST are provincial taxes with separate registrations. GST, HST apply to both goods and most services, including digital products. PST often applies only to goods, not services. GST, HST allow input tax credits. PST generally does not. These distinctions determine what US businesses must charge and where they must register. How these taxes affect US businesses? Whether a US business must register for GST, HST, or PST depends on where the supply is made and the nature of the product or service. GST, HST is required for most taxable supplies made in Canada, including digital services accessed by Canadian customers. PST obligations vary widely by province and depend on the type of product and sales activity. For example, selling downloadable software to Alberta customers may require GST registration but not PST registration. Selling physical goods into British Columbia may trigger PST obligations even if GST HST registration is already in place. Digital services and tax differences. GST, HST apply broadly to digital products, making registration mandatory for non-resident digital suppliers. PST is more limited but still applies in some provinces. Quebec and Saskatchewan have implemented digital tax rules requiring foreign sellers of digital services to register and collect provincial sales taxes even without physical presence. This means US SaaS companies may need separate tax accounts depending on where their customers live. A practical example. A US business sells online training courses to clients across Canada. The company must register for GST, HST because digital services are considered taxable supplies. However, if customers are located in Quebec or Saskatchewan, the company may also need separate QST or PST accounts for digital services. For customers in British Columbia, PST may not apply, but GST will. A second US company selling tangible goods may face even more complex rules. Goods shipped into Ontario require HST collection, but goods shipped into Manitoba require RST registration if the seller solicits sales in the province. Final thoughts. GST, HST, and PST form a multi-layered tax system that affects how non-resident businesses operate in Canada. Understanding which tax applies and where it applies is essential for accurate invoicing and compliance. US companies should evaluate their customer locations, product types, and sales channels to determine which registrations are required. If you'd like more insights delivered in the same straightforward style, you can explore our website. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.